Okay. Hi, Demetrius.
Hey there, how are you, Candace?
I am doing great. I'm really excited that we're starting this series to help educate buyers, our future homeowners.
Absolutely.
At Connections Realty Group, it really is all about helping our new clients, our potential homeowners and buyers understand um, where to go, how to get started, and just giving them little bite-sized chunks of information along the way because we do know the process in and of itself can be a little
Very daunting.
overwhelming. Yep, and
Mhm.
daunting if it's your first time jumping out there. And sometimes people just have questions and don't know where to start, or may have some misconceptions and just need a little guidance to understand. So I know the purpose of today's tidbit of information is
Mhm.
to really link together the desired monthly payment and what that purchase price looks like. How do the two go together? Because what we often hear as agents in that initial conversation with our buyers, the question we ask is, what is a comfortable mortgage payment, or what is the mortgage payment that's desirable to you? And a lot of times I'm hearing 1,500, 2,000. And then when I say, okay, well, what purchase price were you thinking? Then we're hearing 300,000, 400,000. And as we know, those two do not go together. So
Right.
I'm going to turn it over to you so that you can really help educate our future homeowners about, what the current monthly payment would look like based on a desired sales price or their targeted sales price.
Absolutely, absolutely. I think it's important that when we talk about mortgage payment, Candace, that we kind of talk about what all is in that mortgage payment, because I think a lot of people just don't know. So
Right.
it's a total of four things. Principal, obviously, the money that you borrowed, the interest that we want back on that, and then we're going to obviously have taxes and insurance. And that's what often gets people is that unfortunately sometimes people will quote you a payment and not include the taxes and insurance. So when you get your payment from your mortgage person, hey Mama Ro, when you
Mm.
get your payment, make sure that your payment includes everything that you're going to be writing a check for your home, including the homeowners association if there is one. But typically, you're looking at principal and interest, taxes and insurance. One of the reasons, Candace, that we wanted to do this is because there is monthly payments and sales prices have moved up so much in the last few years that people really are a little bit uncomfortable or not clear on what they need to do in terms of how much they want to buy and those kind of things. So, what I thought we would talk about a little bit is the different price points, maybe, and what that payment kind of looks like. And then I'll go back and talk about how we came up with that payment. So perhaps your borrowers could do the same thing, at least in the quiet space before they start going too far. Um, Candace, do you know what the average price is right now for a single family home, pretty much?
You know what? I can't tell you that I know what the average price is, nationally or even within Georgia.
Okay.
Especially with Georgia being so, you know, divided in sub communities and whatnot.
Mhm.
I really couldn't tell you that. I could tell you what I feel it is, and you can tell me if I'm right or wrong.
Well, I'm not absolutely positive, but based on the reading and stuff that I saw, I thought that, well, no, you tell me. Tell me.
Well, I was gonna say the average home price is it around 400,000?
321.
320. Okay, so that's way better than what I thought. Okay.
But that's still a lot. Don't you think, Mama Ro, for a first-time home buyer, that's a lot of money. And what would you guess, Candace, or Mama Ro, it doesn't matter, you can put it in the chat. What do you think a payment on a $300,000 house would be?
I would think a payment on a $300,000 house is 2,800.
Mm, you must be a realtor. Okay, so yeah, let's look at that a little bit. First of all, for anyone that's listening right now, interest rates are between, and we're talking about for FHA mortgages, they're right at about 6.5%. And one of the factors, I'm going to leave a factor for you guys that you can use just to kind of figure out what that principal and interest is. so that you know if you're even close to being in the ballpark. Because remember, principal and interest is only two of the four things that are included in a monthly payment. But we talked about 300,000. And what was your guess, Candace?
I think I said 20, I don't know, 2,600.
That's good. The principal and interest on that alone is 1,800.
Okay.
Okay.
So from that, you're going to add, whenever you're trying to get a monthly payment, you should call a mortgage person. But in the absence of one, you want to make sure that you include things like taxes and insurance. And if you just
Uh-huh.
want kind of an estimate for taxes, because remember, it varies from place to place, but you can also look up the court record, or as an estimate, I just would take whatever the sales price is, those first three numbers of that sales price, you can make it your monthly tax. So, for example, if we were doing $325,000, then your monthly tax amount you can put in is 325. If we were doing 325,678, you still would put 325. If it was
Okay.
400,000, you would put $400. And that will kind of give you somewhat of a cushion for where the monthly payment will be, including principal and interest and taxes. You still have your homeowner's insurance, and mortgage insurance. So that's why it's really going to be rather important that you call a mortgage person. Um, we're able to do a lot more in-depth information in terms of what your payment's going to include. And also, when we find that that payment might not be something that you're prepared to handle, we have the tools to be able to find different programs or different things to look at. Um, one of the things too that we had talked about, Candace, the other day is a lot of your clients will go and look in the newspaper and try and they'll find a house and try and calculate their own payment, or they'll look at the payment in the newspaper and get really excited because the payment's a lot more affordable than they thought. I want you guys to know that whenever you look at a mortgage calculator, that's the thing where you input the numbers
Mm-hmm.
online, you need to look at the back office or already assume two things are happening. And this is really, really important. Two things are happening. One is that they're assuming that that buyer is putting 20% down.
Okay.
Right. Yes.
They're also assuming because they're having 20% down that they don't have mortgage insurance.
Right.
Both of those things are going to throw you in a whirlwind if you think that's what your payment's going to be, unless you're doing the same exact thing. So those calculators are good as a guide if you know exactly kind of what you're looking at in terms of how much down payment, how much the taxes are, and how much the insurance, because a lot of times they also undercut the taxes or the insurance in that particular calculator because they're using it as a marketing tool to kind of get
Right.
you to call, and
Oh,
they can change up. So just be real careful. And one of the things that Connections Realty also always our big advocates are, make sure that you're doing business with someone that you can trust and someone that's knowledgeable. So those are important things. Um, Back to you, Candace.
Yeah. And so what's funny is you're kind of going from the bottom of my list to the top with the questions that I had for
Sorry.
you. So we started with, what the monthly payment actually includes. So the principal, the interest, the homeowner's insurance, and then the mortgage insurance
And keep in mind that mortgage
and tax.
insurance, I know you know, but for the Mama Rose on the line, mortgage insurance is something that you have to add on top of your sales price. So it's a little bit confusing to be able to calculate unless you have the tools that we have here, but I'm happy to do that for anybody at any time.
Right. And
okay.
so did you have a question, Mama Ro?
No,
Okay.
not about that.
Yeah,
Okay. So it's really five things that five buckets that kind of go into their mortgage payment. And then can you also just share a little bit about how a homeowners association fee is looked at from the lender's perspective? Because sometimes I have buyers who either think that that's included
hmm
in that monthly payment and that they are paying that directly to the lender. But really what we know is, you know,
It's,
it is included, but they're thinking, okay, I can afford that on my own. My lender doesn't care about that because that's a separate payment.
that's a good point. A lot of people, even realtors, don't recognize how important that is when when you're being qualified for a mortgage, especially for your housing ratio. They're calculating a percentage of how much you can afford based on your debts. And typically, as mortgage people, we are not counting any kind of homeowners association fee
Oh, okay.
unless you're telling us. And the reason that is because A, um, they're not so new, but for a long time, we didn't have a whole bunch of condos to worry about.
Right.
That wasn't a big deal. So everybody was getting single family residence, and they might have a homeowners association that's just a few dollars, but nothing that would make or break a deal. But the effect that it has is every dollar in homeowners association fee subtracts from the dollars you can spend on your house payment. Let me give you an example. Let's say, for example, I said that you could buy $1,000, you could spend $1,000 or $1,500 on your mortgage. Well,
Mm-hmm.
whatever that homeowners association is, gets subtracted from that $1,500. So let's say you're moving into Water's Edge or somewhere like that, and it has a $400 association fee. And I told you you can spend $1,000. Well, with that association fee, that means now you can only spend 600, which is going to reduce the amount of house that you can buy. And it's really important that you know if you're going to see communities, because that all keeps changing. And make sure your realtor knows that you're looking at communities with condo association fees. Because you don't
Okay.
want to be surprised. You don't want to, even if you could qualify with the higher amount, and usually you cannot, because we're figuring out right from the beginning what your maximum house payment can be.
Right.
So homeowners
Okay.
association can reduce how much you qualify for, and it can also put you out of being able to qualify. One of the good things, though, I didn't mention
Ooh.
previously is that homeowners association, that's when you have a condo or those kind of things. Some of the relief is that the homeowner's insurance, because typically all you have to do is insure the inside of the property, is cheaper. We don't require the same kind of policy if you were buying a single family residence or a place that didn't have a homeowners association. So there's some benefits, some minus and some pros and some cons. But the biggest thing to do is to remember what your monthly payment is that you have to feel comfortable with. And even though we're not collecting that payment, it's a payment that you have to make every month, just like you have to make your mortgage payment.
Right. And before moving on from that, the one little note I want to add to that is if you're looking at single family residential only, I would say in Georgia, majority of those communities are going to have smaller monthly HOA fees versus if you were going into a condo or a townhome. So I don't want to discourage anyone by thinking that, oh my gosh, especially people who may be relocating to Georgia, not really familiar with our real estate world here and the market here. I don't want you to think that it is going to be the average or the norm that a single family community is going to require a $300 or $400 a month
Right. Yes.
HOA fee. That's few and far in between. But definitely when you're looking at townhomes and condos, yes, those fees could be $200, $300, $400 a month. So you definitely do want to have those conversations with your realtor so that they can then go back to the loan officer and say, hey, they're open to both single family and condo. So let's be looking at two different price points so I can make sure that I'm not showing them condos that would be well outside of their budget. So thank you.
Candace, what's the difference? I know we keep talking about condos and single family residences, but just for people that may be listening to us that are coming from different areas, what do we consider the difference between a condo and a single family residence here in Georgia?
Um, to try to keep it succinct, I basically look at whether it's a fee simple property, meaning you're going to own the land
Hmm.
and the dwelling, versus
Okay.
a condo. You don't really own the land; you own ownership within the building, right? So there's
Hmm.
a difference between condominium ownership and fee simple first, single family detached or townhomes. And sometimes people
Okay.
get confused about architecture. So when we say townhome, a townhome could also be a condo.
Hmm.
All depends. And I've seen where sometimes they're mislabeled. So again, working with your real estate professional to make sure
Hmm.
that they're looking at those things on the front end so you don't have these surprises later on after you go into contract and realize,
Absolutely.
oh, there's a little bit of a difference between the two and it could sometimes be costly. So that's pretty much I would say the simplest way of explaining it. And um, like I said, just making sure that more than anything, you're being in communication with that loan officer to make sure that you've got two different budgets when you're looking at
Absolutely.
condos or townhomes versus maybe a single.
That's a good way to say it, Candace. I like that. You have two different budgets.
Okay. And then Demetrius, so again, just recapping, because I know we've got some people that are joining us, and I know our call is only 30 minutes, but we went over how to use the mortgage calculator. And I think one of the big tips that came out of that was, when you're looking at some of these third-party sites, you're not talking with your realtor, you haven't gotten to that step yet to talk to a realtor or loan officer, to keep in mind the numbers that are automatically plugged into that mortgage calculator are really just principal and interest, and assuming you're making a 20% down payment. I think that's the biggest thing. They're
Mm-hmm.
not taking into account homeowners insurance, taxes, and mortgage premiums. So a lot of times people kind of get fooled by that. And that's why they might think that a $1,500 a month
Mm-hmm.
payment equals a $300,000 house. So thank you for going through that and explaining that. You did a really
And can I
thorough.
add one other thing, Candace, just for people that are thinking? We talk about how you can do some of this stuff and figure it out yourself, but just be mindful that we as real estate professionals are here to help you, and you don't pay us until you get results, until you get into a house. So really, you have an attorney on speed dial that you can call, or a realtor, loan officer, just to get expert information to make sure you're not guessing through some of this stuff. Because reading is great, but this is an industry that changes sometimes overnight. And I'd hate for anybody to take it on themselves to read and try and figure everything out and believe that's the end all when things have, changed recently. So take advantage of us and call us. We're here to help you. We actually are.
Absolutely. And then you touched on this when we first started, and we used an example of, that $300,000 price point. And one of the things about partnering with Demetrius that we love is, I think you're going to share with us realtors at Connections Realty Group. You're going to send a table out to us. So we'll
Yes.
have just a quick, answer for you if you are looking at a 300,000 versus a 200,000 versus a 250. But could you just give us a couple, like maybe those price
Sure.
points and what that monthly payment could look like?
Absolutely.
Those are the most common, I think, that we're seeing today. I'm seeing 1,500, 2,000, and then, like a $3,000 a month payment.
Okay. So first we're going to go and look at,
All right.
you said 1,500?
Yep.
Okay. So if you bought a $200,000 house right now, the principal and interest would be somewhere about 1,275. To that, remember, we have to add $200 for taxes. So as you can see, by just doing that example, 200,000 is not going to make it. Do you see that? Because the
Mhm.
principal and interest is 1,264. Remember I said take the first three numbers, which would be 200, add that to it. That's 1,464, and we haven't added any of the insurances yet. And your insurance is going to be at the very least somewhere about $100 to $150. So my answer to that question would be we need to be somewhere about 175
Mm.
to get that payment. Now let's
Okay.
look at
175 equals about $1,500 a month.
about
Okay.
$1,500 a month. And now let's look at, you wanted to look at 2,000 as well, correct?
Yep. And I
Okay.
know we've had some others join us. So if there was a specific price point that you're hearing more often, shout it out. But I think that from my experience, this is typically what I'm hearing from interested buyers.
For a $2,000 payment, you're looking at about 260,000.
Okay.
So as you can see, and these aren't even with outlandish properties. These are normal. And what's the last one you wanted to look at, Candace?
3,000.
$3,000 a month. That's a nice house. You'd be looking at somewhere about 375 to $385,000.
Okay. So I think that unless anyone else had a question or wanted a specific example, you can use those to kind of gauge, and have conversations with your interested buyers, your future homeowners, and kind of give them a roundabout idea. But you never want to state exactly this is going to exactly be your payment. You're just going to give them an idea of about where that payment might fall. Does someone else have question?
I do have a question.
Is that Stephanie?
Yes.
It is.
All
I
right.
know
Hello,
that.
Stephanie.
Hello, you guys are doing an awesome job. I wanted to kind of direct this to you two to see what are you seeing the prices look like? I know that previously $300,000 could get you a really nice house. What are you all seeing in regards to affordability?
I believe that one to you, Candace. I just see contracts.
But for who?
So you're not actually going into MLS or going on one of those web, Google and saying, okay, what does this house look like? Yeah, I would say I think people should expect at least 260 if you want something that is move-in ready. I do think from a size and square footage standpoint, it's probably going to be a little bit more modest. So again, people, you don't know until you start going and touring houses what 1,500, 1,600, or 2,000 square feet feels like. But what I'm experiencing is probably for 260, you might be at around 2,000 square feet, 1,800, somewhere around there. Some of our other realtors that are on the call, please chime in and let me know what you're seeing. I do think if your buyer is open to a little bit of a smaller square foot, so maybe it's a 3-bedroom versus a 4-bedroom, 2.5 bath. You don't maybe have the formal living room and formal dining room. So you get your family room, your kitchen, your eating kitchen, right? Something a little bit more modest. That's going to maybe put you around 1,700, 1,500 to 1,700 square feet. You might be able to find something in that 235 to 40 price range. But keep in mind, if it's desirable to you, it's going to be desirable to a lot of other buyers. So take that.
That's a great point.
With a grain of salt.
Yeah.
Well, I do want to add this because we're seeing the change in the prices, right? You remember y'all here in Metro Atlanta, we were able to get the $300,000 house and have a mini mansion. That ship has sailed.
Right.
Okay. So the challenge we're having and what we highly suggest is get your blueprint up front. Because what's happening is people are getting sticker shock. 300,000 is how many square feet, right? We are now Metro Atlanta, y'all, right? We are metropolitan now, and a lot of people are moving here. We're the LA of the South. So what we have to do is adjust to the price point now. Talk to a realtor and just say, hey, I want to be in this monthly payment. Can you send me a listing of what that looks like? See what that looks like so you don't have sticker shock, right? And I want y'all to understand, some people are saying, well, I'm just going to wait. Waiting is not going to help you because prices are going to continue to go up. Waiting is going to cost you way too much. Okay. And I want y'all to think about this for those of you who are first-time home buyers. This is your first home, not your last home.
That's important.
Okay. So don't continue to pay rent saying I'm going to wait, not own your first home. So then you can take the equity from the first home to buy the second home. Okay. I want y'all to just keep that in mind. So we want to help you all get into home ownership. It is the place to be. People are using this equity for retirement purposes, sending kids to school, and starting businesses, however you use it. But definitely home ownership is the way to go.
Absolutely.
Awesome.
Okay. Well, I don't think I have anything else to add. Anybody else have any questions or comments for Demetrius? No?
I do.
Okay.
Because I know we have 5 more minutes. Demetrius, the last question I would like to ask in regards to the mortgage, or Candace, you may be able to, when you're doing those payments in regards to, have you seen, what are the prices looking like in regards to the mortgage payment and the taxes? Is that a part of what's increasing the monthly payment as well?
Yes. If I understood your question correctly, you were asking, these payments seem to be higher and higher? And is that an effect of the taxes and the insurance in our area? Is that what you were asking?
Yes.
Yes. I'll let Candace jump in about the taxes, but I can tell you from an insurance standpoint, and I don't sell insurance, but I have to have insurance for each of my clients on every closing. And there was a time where insurance was just something that we had to get at the last minute. You can't do that anymore because again, when you go back to when we talk about how much you can afford on your monthly payment, if it's $1,000 and now instead of homeowners insurance being $75 a month, it's $200 a month, that has taken away from what you can qualify for. So I would also caution anybody that has had insurance policies before and has had claims before, that you kind of start doing your work a little bit early in terms of who's going to be your homeowner's insurance policy, because every homeowner's insurance policy in Georgia is not as lenient as most. Georgia's had a number of claims because of the weather, et cetera, et cetera. So they're real particular about that. So that's one of the things I would also suggest when you're looking to be pre-qualified. Let's go ahead and find out to make sure there are no barriers for either you or the house that you buy in terms of homeowners insurance that might make that amount go up and could risk you not potentially qualifying or qualifying for something less. What about taxes, Candace?
Yeah. So what's interesting is, yes, taxes have gone up. I believe at least three major counties in the areas that I mainly service in Georgia, they all had property taxes increase in 2024.
Mm-hmm.
Henry County, Clayton, Fulton. Um, we've typically known DeKalb was a little bit higher. Well, now everybody's pretty much
Hi.
even. And by that I mean yes, higher. And it's not just oh well those taxes in DeKalb are pretty high. So in order to stay in that price point that you want, we may need to look outside of that. Now, no, everywhere is pretty much high. And I
Taxes
feel
are
like
high.
Henry got a big increase. So yes, we do see, and this is something to know as a homeowner. Whereas as a renter, you may have annual rent increases, right? It may already be built into your lease or when you renew. As a homeowner, you just do want to keep in mind that while the principal and interest payment stays the same, amortized over 30 years, you do want to know that at some point, yes, there could be an increase to your homeowner's insurance. There could be an increase to your taxes. So that is why we are seeing now some of those higher
Mm-hmm.
prices or mortgage payments. The other part of that is we do have more corporate owned properties. And as a result, they don't have the tax breaks that a owner occupant would have. And when the loan officer qualifies you for your mortgage payment, right, and they're looking at the taxes, even when you go into contract, they're looking at the most recent tax bill. And so I have seen where even the same community, maybe the same price point or similar price point style of home, if one is corporate owned and one is owner occupied, the taxes for that owner occupied are lower, and
Mm-hmm.
and my buyer can afford it. Whereas
Yeah.
that corporate owned home, the taxes are higher because they don't have the tax benefit or tax break that other owner occupied house has, and so now they can't afford that one. It
Right.
could be priced the same, but because those taxes are so different, that's knocked that other one out, and that's not an option anymore. So that might have been a little bit over explaining, but it's all connected.
Yeah, no, I think that's important. And also be mindful, this is to my realtors that are on the line. If that happens, and it does, it really does. Most of the time it happens and nobody really worries because you still are okay. But there are times when that will just break you. Because when we're obviously again going through the payment, we're quoting what's average and normal, not what is outside of the box. So we often can work with our attorney, our closing attorney, and if we can show them that, then we can get it adjusted so it's at the very maximum where the owner occupied would be before their homestead
Awesome.
exemption. But that is happening a lot, a whole lot.
Well, that's good to know that you all can
Absolutely.
step in and try to help get that tax I guess the payment reduced
Right.
tax bill. So I'm
Mhm.
not going to speak too much on that myself because I don't know what that looks like. But that's wonderful. It's good to know. I didn't know that.
Well, and I will add this too for anybody that's perhaps with us now or watching us on the replay. I don't want you to get nervous about buying a house in Georgia. Georgia is still one of the most affordable big cities out there. Our average price is somewhere about 320. Keep in mind as it relates to taxes, because I know some of our seniors are worried, they retire and then their taxes are going to go crazy. What we're seeing now in taxes in Georgia is not usual. It's a reflection or a response to the pandemic. When the pandemic happened, obviously everybody's properties started to change. And so, but they weren't adjusted because there were not people in the office to adjust them. So some of the adjustments that you're seeing in terms of taxes were adjustments that should have been there a year or two ago, but they're just now getting staffed, revamped, where they can send that stuff out. So it's going to be a little bit of a sting for our existing ones in some cases, but overall, Georgia is a pretty good, smart tax place to live. You still can get great values on houses. And I've been in this industry for a while, and I can tell you that Georgia also has some of the smartest realtors. So that's really, really important because you want someone that's going to advocate and sell your house as if it were their own. And that's why I love working with Connections Realty. Back to Candace.
Well, thank you so much. That's our time.
Oh,
It was a really informative session. I appreciate you, Demetrius, for jumping on.
absolutely. I think this is great that we're
The
doing this for the
questions.
clients. This is going to help a lot of people.
Yes, yes. Thank you for everyone that hopped on and was able to join us and ask some, really great questions. And I hope that we have helped you along your path towards home ownership. And at Connections Group, we like to say, if you stay ready, you don't have to get ready. So let us help you get there. Okay.
Absolutely.
All right, guys. Take care.
Thank you. Have a great day, Candace. Bye, Mama Ro, Dana, Stephanie. Bye.
Bye.
Bye.